What's happening? Welcome to Sunday Swing Trade Setup, episode 31. I'm gonna give y'all some swing trade plays, man. I've been going crazy in the market to be real with y'all. I've been trying to get this lighting perfect, but I've been going crazy in the market, man. I'm in some leaps. I had a perfect week trading. So I'm gonna go over some swing trade plays setup. I could talk about the leap a little bit if y'all want to, but you know how we gonna do. We gonna look at the fear and greed index first. Fear and greed index. The market is fearful. I love when people are shaking in their boots. That means I need to deploy capital. I need to make some money when people are afraid. Fear is my favorite emotion in the stock market. I get excited when everybody is fearful and selling. That's when I start buying. So we do have fear in the market, which is usually a good sign for the markets. But everything ain't always black and white. We just finished July, which is one of the strongest months in the market, and this July didn't seem all that strong like that. So we're gonna see what August bring, and then we do know September is usually the worst month of the market. So you know what I'm saying? Maybe I could show y'all some put swing trade plays for September. I actually got a put option swing trade play for today, though. Even though I think the market is gonna go up, I like to give y'all options, do the homework for you, let you decide which one you want to jump in. So the market is fearful. Let's take a look at Forex Factory and make sure there's nothing that Kevin Warsh is gonna, you know what I'm saying? We will make sure the Fed ain't gonna mess up none of these swing trade plans. So let's see what we got. Nothing crazy on nothing crazy on Monday. Non-farm payroll. Oh, that is not good. All right, so you see the non-farm payroll, non-farm employment change. That is, basically like jobs, right? Non-farm employment change. And you can always, if you don't know what you're looking at, you can always pull up the folder and it'll tell you exactly. Estimate the number of, as you can see, it says the estimate change in numbers of employed people during the previous month, right? Of course, we need jobs, we need people working for the economy to do well, and this report don't look all that good. To be real, the report do not look all that good. Last report, it was 98,000. This report they're forecasting 71. That's not good. Um, Employment change, they're expecting that number to be greater than previously, so that's not too bad. Friday unemployment. Friday we got a couple red folders. So wait, is that Friday, August 7th? August 7th is that's most likely Friday, I'm pretty sure. But Friday looks like the day that you might want to approach the market with caution because we got non-farm employment change, unemployment. We got a lot of red folders on Friday, so approach with caution on Friday. But we got fear in the market. That jobs number is, it kind of represent fear a little bit. So we got we could be expecting some bad news in the job reports, and there's fear in the market. Maybe the market will get a little more fearful. Let me pull up the total stock market to see if we could find a directional bias. You know what I'm saying? Um, oh, my bad. I'm skipping a step. I ain't pull up Bloomberg to see what the news talking about. Um, and the news, like you don't have to really like reread the news like that, but you do want to know like what they're talking about because people watch the news and people are the buyers and sellers in the market. You know what I'm saying? So you got to know what's going to drive these people emotions, and the news will drive emotion, right? So what we looking at? Trump holds off Iran strikes. Pledged the Hormuz deal is close. Okay. That looked like good news. I know the market would like that. Let's see. Face fresh trouble at the funds. Who cares? Bloomberg leaving behind more than anyone. The age of uncomfortable. AI is now power and American lead is shrinking. All right. I mean, that's not the best news that America's lead in AI is shrinking, but we know China and Korea, they kind of stepping their game up on that. So but it looked like the main headline, is a good one. The main headline looks like Trump is holding off on some attacks. We know that could switch up, that could change, but we in the market for minutes and seconds. You know what I'm saying? So if it changed next week, it's all good. So let's look at VTI total stock market. Let's see what we see before I get these plays. So we got a nice consolidation, almost like a little flag, right? And usually, like the market does give it sign, especially like if it has a very strong move, the market does allow like if a lot of times emotion can drive up the market, right? So if the market just pushed up real crazy like it has been consolidating lately just to kind of make the price of the stock market more reasonable, if that makes sense. The market got emotional in one direction going up, and then it consolidated to allow the values of these companies to catch up. Every company hasn't been consolidating. Companies that ran up the most have dropped a lot, right? Making the price a little more reasonable. So we're consolidating, and the MACD look like it's about to turn green on this histogram here. The one I'm making larger and smaller on the MACD, you can see the lines are about to cross, and the bars at the bottom will eventually turn red. So fear and greed index is saying fear. VTI is saying that we could be going north for the summer, and the MACD look like it has the potential to cross. So we have a bullish bias, which means a lot of my swing trade plays are going to be bullish, right, to the upside. So um, I'm gonna go with Tesla. The first one on my list was like one of my favorites, so I'm gonna go with Tesla first, and I'm gonna tell you what I see on Tesla. All right, so Tesla, I mainly just got Tesla on here because how much it dropped. If you look, Tesla does have a little gap to fill over here in this little area right here. It has a gap to fill, and it's big oversold on the RSI down here. You know what I'm saying? So Tesla's not one of my favorites, but I do see this gap, and we're pretty oversold. So you know what I'm saying? Keep your eye on it. I wouldn't jump into nothing crazy on Tesla. That was my least favorite out of all so that I got that garbage out the way. Let's talk about something that looked better. I do like HCA. HCA is hospitals, right? The healthcare sector. The healthcare sector has been doing pretty good this year. Tech has been kind of sliding, and usually when tech ain't doing too well, people still spending money in hospitals. So I like HCA. It's came down a lot. The RSI is above 50. The MACD is red, but we also got a double bottom. For anybody new to this trading thing and not too familiar with patterns, I can show you what a double bottom looks like. You can pull up all this stuff on Google, and you can pull all this stuff up on Google. If I say something that you know what I'm saying don't sound familiar, pull it up on Google, and it's like, what bro mean double bottom? Well, Google gonna show you. So pull up the double bottom, and it's basically, when you're looking at price, you're looking at the candles, it's basically a W. And you want it to break that neckline to confirm the W, because the W can always turn into an M, right? So it has to break the neckline to be a confirm. The best case scenario, which in some cases will allow you to miss the play, is for it to come back down to retest. If you look to the one, two, three, four, the fifth picture over to the right, the second one, if you're going from right to left, where it says double bottom chart pattern. As you can see, it retests that neckline of the W before going up. Now you do have the potential to miss the pattern if you're waiting for that retest for it to come back down and hit the W, but better safe than sorry, right? So HCA got a nice double bottom. This don't look like a play that I would enter on Monday, but if we have a clean close above 340 for HCA, let me pull the chart back up. If we have a clean close above, if we have a clean close above 430, I think I said 340. A clean close above 430, that would be a confirmed double bottom. So this would be something to keep your eye on, not something to jump in on Monday morning. You know what I'm saying? Maybe Tuesday, maybe Wednesday. But let it prove itself to you first. Right. So I like HCA. Let's go with the next one. All right. Now I like Hood. I'm not in love with it though. I'm not in love with it, but I like Hood. So let me go over why I like it, right? So with Hood, we got the bullish divergence, right? Where price is making higher lows, but the indicator is making lower lows, right? Divergence. And what I don't like about it though, let me make sure y'all looking. So that's a divergence. Higher lows on the price, lower lows on the indicators. The indicator is not reflecting the price. Essentially, is what that is looking like. So I like it because of the divergence. The reason why I don't like it is because these MACD bars are getting deeper. They're getting bigger, which means the trend is down, and what you're trying to do in this trade is catch a falling knife. So if you jump in on Monday, you could hit big, or you could be jumping in too early, and the divergence is just, you know what I'm saying, a fake out, or needed more time to expand. So Hood, I would take that one with a grain of salt. That one is not the best, but another way to really another way to assess which way Hood is going is to look at Bitcoin. Now, Hood don't always represent Bitcoin, so it's not but they do have a relationship. They do have a, my bad, let me get this off the screen. Hood and Bitcoin do move identically sometimes. Right now, it don't really look like it, but sometimes if you want to get into a Robin Hood play, look at Bitcoin and see if it's gonna match. All right, so I got two. I'm gonna go to my favorite two right now. Second to the last, we got McDonald's. We got McDonald's. Let me make sure y'all see what I see. Make sure y'all see what I see. So we got McDonald's. Now, I like McDonald's for a couple reasons. I like McDonald's. Why? Because it's down from the highest. Price currently is at about 270. And at all-time highs, we was all the way up here at what we was at all-time highs? 336. And it's currently at 270. So I like it because it's dropped on a discount. I kind of see what looks like a falling wedge a little bit. I'm not really the best with falling wedges. I don't really trade falling wedges. We could do this as a case study because I really want to get better at falling wedges. But I'm not really the best at for some reason falling wedge is always. I feel like this might be a falling wedge. Y'all, let me show y'all what a falling wedge is, and you tell me if it resembles a falling wedge a little bit. But and the falling wedge ain't the only reason why, but this is a falling wedge, right? It's basically price consolidating within a channel, but it's going down, right? And once it breaks out of that channel, these things run. I'm talking about like they go up crazy. These things go up crazy when they break out, but I'm not really good at assessing these. I don't really trade or swing trade falling wedges like that, which I would like to get better at them, to be honest. But I feel like I see a falling wedge on McDonald's. But it's not the only reason why McDonald's. So I don't know. I get kind of falling wedge vibes from it. Um, but I also like McDonald's because we do have a bullish engulfing candle. Bullish engulfing is basically when, if you look at all the way over to the right, you see that green candle is larger than the prior candles. The prior candle. It's better when it's larger than multiple candles, but it's larger than the candle before it. But also, if you look at this MACD is green. The last bar was even higher than the one before. So that kind of give me like, okay, well, we got some upward momentum. So I'm not gonna lie, I like to play McDonald, you know what I'm saying, but I'm not trying to lose no money on no falling wedge, even though I feel like it looks like a good one. I'm just not the best at swing trading those. So we could do it as a case study and revisit McDonald's next week. Um, but now I'm gonna hit y'all with it. Um, so if you like follow me on Facebook or anything like that, you know that I got into the Microsoft Leap play, still holding it, held it through earnings, where I'm up big on that one. I'm up real big on that one, and that don't expire till December of next year. So I got time to be up even bigger. But ServiceNow is my favorite because ServiceNow and Microsoft are kind of in software. Microsoft kind of gave, you know what I'm saying, Microsoft kind of gave the software industry a little more life. You know what I'm saying? Like, okay, we're not dead. AI is not going to kill us. You know what I'm saying? And kind of, so I feel like right now, software is probably going to shine a little bit. So that's one. But two, I do like it looked like an inverse head and shoulders a little bit. Um, and I like to show y'all a true example of what I'm talking about, just because sometimes you look at a pattern and you be wanting it to be something that is not. You be like, no, that's an inverse head and shoulders, and it don't even look like it. But an inverse head and shoulders is, three drops, but the middle one is longer, head and shoulders. But once it breaks the neckline, it's another pattern that usually goes. It's a strong reversal candle or a strong reversal pattern, right? So we got ServiceNow, look like it wants to mirror the big homie, look like it want to copy Microsoft and do something crazy. So if you see what I'm seeing, I got hold on. If you see what I'm seeing, we got two shoulders and a head neckline on ServiceNow, and we run it. So that's my favorite. That's my favorite. Oh, that's my favorite one. Just in case the market drop, I got one more for y'all. The Swing Trade Sunday really done now. ServiceNow is my favorite one. We know which direction we think the market should be going next week, but I got one more just in case the market drop. I got one more for y'all. So I'm looking at Meta. Meta had a big drop after earnings. Meta had a big drop after earnings, and it's giving me vibes that it's probably going to continue dropping. The reason why I say that is because if you look down at the MACD, and this is on the weekly, this is longer term. But if you look at the weekly, MACD look like it's about to cross, and we right there at that neckline for the double top. So if anybody got the courage, I'm not a put option swing trade player. Like, you know what I'm saying, I know the market goes up, so I only swing trade upwards. But if you looking for something to the downside, something that you want to drop, I feel like Meta may be that one. But that also come with a caveat though, and I'm gonna explain why. You don't you don't want to chase something after a significant move because you gotta allow it to come back to reality a little bit. So it dropped real hard just on some marketing, like what they was talking about for earnings, and it dropped. Put the hand down. That thing dropped. So hold on, let me pull the chart back up. So we're far away from the 9 day moving average, and the price usually has 9 day moving average usually has gravitational pull to the price. So the price will either consolidate to allow the 9 day moving average to catch back up, or it's gonna go up to the 9 day moving average and it has a potential to come back down. As well as it could go up. You can't predict everything, but for a put option, I do like this potential double top that Meta currently has. I appreciate you watching the Sunday swing trade setup. Make you some money in this market and also protect your capital. Use a stop loss.